Welcome to this video about our microcap top picks for 2022. Please note that this video was recorded on January 13, so all stock prices in this presentation are as of January 13 before the market opened. This presentation will be available on our website for download. First of all, let me just say that this video is for informational purposes only. This is not a recommendation or investment advice. Rivemont may hold positions in the stocks that we will mention today and may trade on these stocks at any time without prior notice. So first of all, a little bit about Rivemont. The firm was founded in 2010 by Martin Lalonde, initially based in Gatineau and now with an office in Montreal. The firm has 95 million of assets under management, and mostly in traditional mandates of stocks and bonds. We also have three investment funds that Rivemont manages. The first is the Alpha Fund, which is a long-short hedge fund. The Crypto Fund, which is an actively managed cryptocurrencies fund. And then we have the Rivemont MicroCap Fund, which I will present today. So a little bit about myself. My name is Mathieu Martin. I'm the portfolio manager of the Rivemont MicroCap Fund. I started in the microcap space about 8 years ago, initially as a private investor, and I was investing my own capital. I was looking for a strategy that I could develop and gain an edge on other investors, and I figured that the microcap space is ripe for overperformance because most large institutions don't really invest in this sector. Companies are too small. It's hard to deploy large amounts of capital. So you mostly compete against other private investors, maybe people that do this part-time, maybe people that don't do their research properly. So there are a lot of inefficiencies that you can exploit. At the same time, I developed a community and blog called the Space Microcaps. The goal initially was to share educational content and investment ideas, and also to build a network of other investors and also industry professionals. Finally, I'm a CFA charter holder since November 2020. So just a snapshot about the fund as of December 31st. The fund had 16 million of assets under management. The fund generated an annualized return of 17% since inception about 4 years ago. We have 32 positions in the portfolio, but we remain fairly concentrated. Our top 5 holdings represent about 42% of the assets. In terms of sector allocation, there are 2 sectors where we are mostly active. Those are healthcare and technology. Why is that? First of all, by elimination, we don't like to take on any commodity risk, so we avoid anything that's energy or mining related. Then if we think about real estate or financial companies, it's hard to find very attractive investment opportunities, specifically in the microcap space in Canada in those sectors. So we tend to shy away from these as well. And what we're left with is healthcare, technology, a little bit of consumer goods, and some industrial as well. Now, the investment strategy. So what do we look for? First of all, we want to see companies with strong revenue growth. If we want to overperform, we need to find companies that are growing quickly. So what we like to see is a company growing at least 30% year over year, and the more the better. Then we want to see positive cash flows or a clear path to it within a year. What does that tell us? It tells us that the company has a viable business model, a proven business model. There's a real demand for their product or service. So it provides better odds that the company will still be around in a few years. Then we want to see clear competitive advantages. And when I say this, I don't mean a strong brand like Apple or a network effect like Facebook. You won't find this in microcap companies. But what we look for are companies that are dominating a specific niche, specific segment of a market. Or maybe the market is just too small and no large companies are interested in it yet. So we want to see how the company is able to differentiate itself in its market. Then we want to feel that the company is predictable and easy to understand. So if we want to put a value on a company, we need to forecast the next 2 or 3 years, and if we can do that, it's very hard to get comfortable and to make a decision to invest. And finally, we want to find companies that have an outstanding management team. Every time we invest, we get in touch with management. We ask some questions about their capital allocation skills, how they think about the risks and opportunities for their business. We also look at their track record. Have they built and sold companies successfully in the past? Those are the things we look for to make sure our capital is allocated alongside the right people. Now, how are we positioning the portfolio for the year ahead? First of all, 75% of the portfolio is invested in our top 15 best ideas. And when I say best ideas, I mean companies that meet the criteria I just spoke about. So we're looking for high growth, high quality companies that have a track record of strong execution. Again, mostly in technology and healthcare. Then the other bucket is an allocation of about 15 to 20% to earlier stage opportunities. Why do we want to invest in earlier stage opportunities? Maybe because the company doesn't fit our criteria yet, but we feel it will meet our criteria eventually. So if we have a high level of conviction in the product or service or in management, we might decide to get positioned a bit earlier, always thinking that it's more risky, but the return potential should be higher as well. And then the last bucket is cash. So we keep 5 to 10% in cash to make sure we are nimble and can act quickly on new opportunities. At the end of the day, what's important to remember is that we're extremely selective right now about what we add to the portfolio. There's been some volatility lately in the market with the Omicron variant, with the inflation that's rising currently. We've seen volatility in risk assets in the last few weeks and months. So we don't know where the market is headed in the next 6 to 12 months, but what we know for sure is that we're invested in high quality companies that have a strong balance sheet, that are profitable, and that can get through a crisis if there's a crisis. So we really want to focus on the companies we know well and know they can execute well. Now let's move on to this year's top picks. So what we did first of all is we selected a team top pick, and when I say team, I mean Jean Lamontagne, portfolio manager, myself as a portfolio manager, and Philippe Lapointe as our analyst for the fund. So it was pretty unanimous that Microbiotix Biosystems is our top pick for this year. The company is the largest position in the fund currently. What they do is they support the diagnostic testing industry by selling a variety of different products. When we say diagnostic testing, we can think, for example, about COVID-19 testing. But there are a lot of other diseases that are getting tested, for which Microbiotix provides some of its products. What happened at the beginning of the pandemic was that Some diseases were getting less tested because the capacity was repurposed for COVID-19. So Microbiotix suffered a little bit at the beginning, but they acted quickly. They developed new product for COVID-19, and eventually, a few months into the pandemic, their sales started rising very quickly. In 2021, we saw a revenue growth of 80%. The company became highly profitable, and we think this is only the beginning. We're still forecasting another 50% revenue growth for next year, and significant profit growth as well. Based on our forecast, we think the company is trading at about 11 times earnings. So a PE of 11 for a company growing 50 to 80% a year, we think is extremely undervalued. Next up, we have Jean Lamontagne's top pick. Jean chose Media Valet for this year. Media Valet is in the digital asset management industry. They sell a software for large enterprises that have tens of thousands of digital assets to manage. So for these large companies, they can't get away with using a platform like Dropbox. They need a software that's specifically made for this use case, which is this digital asset management. So the company has been growing very quickly so far. They've grown revenues over 50% per year for the last few years. They're up to about 10 million in annual recurring revenue currently. In terms of valuation, we're talking about 7 to 8 times AR. So not cheap, but we think the company has an excellent product. They invest a lot in research and development to improve it. They have one of the best management teams out there. And we feel that if the company is able to keep growing at this pace, they can reach $30 million in revenue within a few years, and at this point would probably be an acquisition candidate for a larger corporation. So we feel that there's a very good return potential on this one. So now my personal top pick is Covalent Technologies. Covalent is in the infection prevention business, so again, healthcare sector. What they did is they developed some technologies that they patented to prevent infections in hospital settings. So think of like bandages or catheters with a coating that contains an active ingredient that kills bacteria and that prevents infections. So essentially they're improving outcomes for patients, and they're reducing costs for the healthcare system. Our investment thesis on Covalent is centered around the fact that the company had 4 divisions last year, and they did a strategic review to determine if one of those divisions could be sold to a strategic buyer. So at the end of this lengthy process, they decided to sell their division called AquaGuard for $38 million. And what the management said after the sale was that AquaGuard was their least attractive business unit. It had very few patents or intellectual property around it. The growth potential wasn't very high. And they think that each of their remaining 3 divisions are more attractive and should be worth more than AquaGuard. So if you do the math, there's potentially over $110 million of value remaining in the 3 current divisions, and the company is trading at a market cap of 60 million with 25 million in cash and no debt. So there's a significant gap between the current value and what management thinks the company should be worth. Now, we're not taking only management's word for it. We're also doing our own research. We have our own financial model, and we think the valuation is very reasonable at less than 2 times next year's revenue. And at some point, we feel like the market will realize and revalue the company at what it should be worth. Now, lastly, we have Philippe Lapointe's top pick. Philippe chose Iniotech for this year's top pick. Ineo is a company that manufactures and sells loss prevention devices for the entrance of retail stores. What they did is they patented the combination of a loss prevention system with a digital display where they can put ads. So what happened is that they started commercializing this technology in British Columbia in a network of independent alcohol retailers. They deployed to about 100 stores and started selling ads to advertisers. Revenues were ramping up. And then last year they were approached by Prosegur, a large multinational corporation in Europe. Prosegur essentially told them, we like your product, your patents are strong, and we want to become a reseller of your systems and your technology. So it took a few months, they signed an agreement, and now Prosegur is an official reseller of Ineo systems across Europe and also in the United States. What's interesting is that Prosegur generates already billions of dollars of revenue, and I don't think they would be interested in Ineo if they didn't see potential for tens of millions of dollars of revenue down the road. So it's still early stage, but there are a lot of pilot programs going on right now at major retailers, and if Prosegur is successful in deploying those systems, we think Ineo revenue will ramp up very, very quickly, and they will be highly profitable. So at a valuation of 17 million, we think this one has a lot of potential. So that's it for our top picks for 2022. Thanks a lot for watching. If you want to get in touch, my email is there, as well as the phone number. Feel free to reach out. You can also visit our website, rivemont.ca, for all information about the Rivemont MicroCap Fund and also our other strategies. We'll start putting out more video content in the coming months, so if you're interested, please subscribe to our channels. I want to thank you very much for your time, and have a great day.